So today what I wanted to do is spend some time talking to you about our new customer insight solutions for banking, wealth management, and insurance. And one of the things that really struck me as Jim was talking about just the dynamics of the market, is you guys actually know a lot more about your customers than Facebook or Google or Amazon or any of those organizations know. You guys know how much someone spends, where they spend it, what time of day they spend it. You know where they're going, where they're spending their time. And you also have a lot of information about how they're interacting with you, how they're funding their accounts, the trades they're making, the claims they make, things of all that nature. But unfortunately, most financial services organizations are not using most of that information today. Most of your insights are based on high-level demographics, household income, maybe what accounts they have and what balances they have in those accounts, things of that nature. So what we've been doing at IBM is looking at how we can expand your use of data and taking all the transaction details, the interactions you have with your customers, how they fund their accounts, how they pay for their policies, things of that nature, and pulling all of those behaviors in to generate a set of new insights that are enabling banks, wealth management firms, and insurance companies to do things like predict life events, predict financial events, and identify propensities more accurately. So what's new about the solutions that we're launching here today? A few things. One of the things that we've begun doing, as I talked about earlier, is we're infusing cognitive capabilities into these solutions. So we're enabling you to start taking advantage of all the broader set of unstructured information and do things like understand the personality traits and characteristics of your customers. Being able to apply machine learning so that you can understand and identify new patterns of behavior without having to pre-code them in or define rules for that in advance. We're also introducing a new capability we talk about as dynamic segmentation. I talked earlier about wanting to kill traditional approaches to segmentation. How do most of you segment your customers today? You have a generic set of customer segments. Maybe you have 3 to 4, maybe you have a dozen or so. But you can't fit all of your customers into these high-level groupings. And on top of that, how do you then drive action against these high-level segments? When you look at all the customers that are likely to churn, likely to overdraft, something of that nature, they all look different. So you don't want to give the same offer to every one of those customers. So what we're doing in these new releases is we are on the fly, based on the individual life event predicted, the propensity, whatever it is, we're actually going out and dynamically on the fly generating segmentation of all the customers that are likely to churn. So you can see what are the different characteristics and groupings of all the customers likely to churn and send different offers based on who they are. We're also expanding the set of analytic and predictive models that we're delivering in these new releases. New life events, new propensities. And we're starting to incorporate more and more data sources, incorporating things like not only unstructured information you have across your organization, but looking at pulling in other factors that might influence behavior, whether it's weather data, and even through third-party relationships, such as the partnership we announced with Axiom a couple of months ago. We're actually enabling you to pull in Axiom data to find lookalikes to go prospect and identify new customers that look like customers that you're winning business with today. And then finally, and just as exciting, is all of these new solutions are being delivered over the cloud. And not only are they delivered over the cloud as a service so that you can more easily and quickly start taking advantage of these capabilities, we've worked out the details around providing private cloud instances, separate containers for each organization's data so that you can ensure that your information remains secure. This is going to enable financial services organizations to accelerate the ability to take advantage of these analytics and get to the cloud and deliver these capabilities across their organization more quickly. So I mentioned before that we've been doing pilots around these new solutions. And the results we have are amazing. And I'm ashamed to say one of the guys at IBM that we worked with around this solution turned to me and said, "Oh, these solutions actually work." But it's amazing when you see the results. So at one bank that we worked with, we were able to predict overdrafts a week ahead of time with 94% accuracy, and 4 weeks ahead of time with 87% accuracy. Another organization we worked with, we were able to, by incorporating some additional data elements, improve their churn models by over 50%. But even more impressively, at another insurance company, we were able to identify cancellations and non-renewals in advance with 78% accuracy. Imagine if you could identify all the customers that were not going to renew their policy or cancel their policy earlier with 78% accuracy. Life events is another great example, and you're going to hear some of the customers come up on stage and talk about the type of events that they're trying to predict. You can imagine what they are. Things like when someone's going to have a baby, when they're going to get married, sometimes in that order, when they're going to retire, when they're sending kids off to college, when they're about to buy a house. If you can identify all of those things in advance, you can get ahead of your customers' needs and be there for them when they need you and when there's an opportunity. And in one of the pilots we did, we were able to predict 9 different life events with 95 to 97% accuracy by looking at this broader set of information and applying cognitive machine-based learning capabilities. Another organization was dealing with a big challenge in that they were delivering these offers to every customer that was predicted to churn, or every customer that was predicted to potentially have a large deposit or something of that nature. By applying dynamic segmentation and by identifying the right customers and improving the accuracy of the propensities, we were able to improve their targeting of offers by 91%. So what does that mean? There were 3.6 million customers that they were able to avoid getting an offer that was completely irrelevant to them. Imagine being able to reduce those kind of false positive touch points with your customers and make sure whenever you're engaging with them, it's something that you know is more likely to be relevant to them. These are the types of benefits we're seeing here. So what I'd like to do now is I'd like to bring Boxley Llewellyn up to the stage to start giving you a demonstration of some of the solutions that we're highlighting today. Boxley?